Hola, 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 perra todos y bienvenidos to Dapper Dividends. I am Russ. I'm going to show you a little bit of charting. So school's in session. I'm going to show you the mistake I made last Thursday and why you can't force trades, why when you don't wait for your pattern, when you don't wait for the indicator, when you don't wait for the stars to align, bad things are more than likely going to happen. Now you may be saying, but you're a dividend channel. Why are you talking about options? Well, I'm a human being. I don't gamble, and this is the closest I get to gambling. I wait for patterns to emerge on the chart. And again, with a chart, everybody should know how to read a chart. It can only pay dividends because the chart is the language of the market. I don't care what any of the talking heads are saying or what your Uncle Sal says. The chart is what the market is telling you. And yes, while I am thinking not only years down the line, but generations, I have infinite thinking. Options are the opposite of infinite thinking. They are incredibly finite. As you see with this call option that I bought today, I bought two $50 February 5th, 2021 calls. That means if Coca-Cola closes below $50 a share on February 5th, if I still hold these contracts, they will be worthless. I did buy this for 30 cents a share times 100 is $30. I got two of those, which was $60, $1.30 commission. So a total of $61.33 and the processing fee. Hey, you know what? On a side note, every broker is going to make money one way or another. Robinhood is not completely free. They make money on you. There's plenty of videos explaining that. All right, so this is the Coca-Cola chart, the daily chart for Coca-Cola. Right away, if you're new to charting, I want to point this out. This didn't really factor into my decision to buy two more call options for Coke, but gap fill right here, this candle and this candle, from the close of this day to the open of this day, you can see price significantly jumped and there was a gap. Now, gaps usually fill, not always. It may take a few days, weeks, a year even, but usually down the line, gaps will fill. As you see, it did happen here. So what was I looking for when I bought this call option? Right down here, where I have this green arrow, this is the CCI indicator. If you look back, you can see every time there's the negative 100 line and the positive 100 line. Every time it crosses up through the negative 100 line, there is a move up a few dollars. And then you can see here, it crossed up through the negative 100 line, big move up. And what did we have today? It finally happened. Now, this candle right here, where I put candle violated structural support, if you look right here to the left, there was support. Price dipped just below, but it did close above support. You can see 1, 2, 3, 4, 5 candles held that $49.50 support. And then what happened right here? On the day I bought, it closed below support. The CCI indicator was ticking up, but it never crossed through the 100 line. So that was number two. Number one rule I broke is it violated structural support and closed below 49.50. And as you can see today, we crossed up through the negative 100. So this tells me that within the next 1 to 2 weeks, price should continue up for a few dollars, which would put me over the $50 range. One more thing to point out about the CCI, just a real quick refresher. It's kind of like a rubber band. When you see the brown here, it's usually going to come up in price at some point in the future. We don't know when and we don't know how much. And when you see green, at some point, it's going to come back down. So there was 4 things that I really liked today that I bought these call options. Number one, the RSI bounced off the oversold line, bounced off the 30 line, and has started to tick up. That's number one. Number two, the MACD fast line, which is this black line, has bottomed out and looks like it's ready to start curling up. That's number two. Number three, and most importantly, the CCI crossed up through the negative 100 line. And number four, there was support the last few days at 48.50. Price dropped down to 48.50 today and bounced up. And as you can see here, there's 2 white candles. And what do we have before the last run up? 2 white candles, and then the one before that, 2 white candles. That's just really basic. There's a lot more to look at, but I don't want to get into the weeds, and I don't want this to be a 30-minute long video of me rambling on, so I'm going to end it there. Again, charting is an art and not a science. It just tells us what is likely to happen, but does not mean that is what will happen. And you always need to have an entry and an exit, and you need to stick to it, which is what I have such a problem with. If you like this, let me know. Expertise comes from the community, so please leave your comments below. Let's talk about it, and I will talk to you in the next video.